Welcome to the Tesla Economist. Please hit the thumbs up and remember to subscribe. You can follow me on Twitter and talk to me on Patreon. We had a little clue hearing that Tesla will be back to being battery constrained next year once the chip shortages are fixed. In the past, we'd also been told that Tesla should hit a run rate of 100 gigawatt hours by the end of the year for their 4680 production line. I think it might have been on the Q2 earnings call we were told that. If Tesla are back to being constrained by batteries in 2023, with a 4680 run rate of 100 gigawatt hours at the start of the year, and then perhaps the ability to hit 200 gigawatt hours by the end of the year, so let's say we could expect 150 gigawatt hours of 4680s in 2023, that is enough batteries for well over 2 million vehicles. Tesla may also have secured around another 100 gigawatt hours a year from CATL by then, compared to what Tesla had last year. This is being very modest, given that just in a few months, CATL have an extra 80 gigawatt hour a year fab that was established near Giga Shanghai. On the earnings call, we were also told that even Giga Nevada is still expanding, so likely so will LG and Panasonic in Japan. Last year, Tesla secured around 70 gigawatt hours from their suppliers, so perhaps by the start of 2023, this has also increased to 100 gigawatt hours, on top of CATL. If we total all of that up, we come in at 350 gigawatt hours of batteries for 2023. If the average vehicle is using a 65 kilowatt hour battery, then that is over 5 million vehicles. Alright, we haven't left much for energy, but bear in mind, only 4 gigawatt hours was deployed last year in energy. Tesla are not going to do much of energy until they have their own LFP batteries ramped up. But perhaps by 2023, Tesla are getting closer to say 20 gigawatt hours a year, especially with more CATL LFP batteries. I mean, maybe CATL are supplying Tesla with 200 gigawatt hours a year by that stage even, meaning more standard range Teslas from China and LFP batteries for energy perhaps. But 5 million vehicles in 2023? Well, why is this not possible? I mean, even if we hit 2 million in 2022, then that's still a 150% increase in deliveries, and we're thinking 100% might be high. Well, what if Tesla only produced 100 gigawatt hours of 4680 batteries in 2023, and still only had 80 gigawatt hours from CATL's new facility, and weren't able to ramp up any more from their existing suppliers? I know you could say, what if there are still chip shortages, but there are a lot of semiconductor fabs opening soon too, which is fantastic news. So 2022 may be a bit rough and not too much to boost the stock, but possibly still some buying opportunities. On the other hand, for all we know, Tesla could end up becoming the most valuable company in the world when people realize what is happening. Okay, so in the worst case scenario, we have 100 gigawatt hours of 4680 plus 80 gigawatt hours extra from CATL, plus the same 70 gigawatt hours as what Tesla's suppliers provided last year. That equates to 250 gigawatt hours of battery still. And what if even 30 gigawatt hours was used in energy, leaving 220 gigawatt hours for cars? That's still 3.4 million vehicles. And this is 2023. And that's not the run rate, that's the total number of vehicles. And that's if there are no new developments from today, no new battery fabs or factories, implying that the 5 million scenario is more believable. But even if it's not, 3.4 million is still a great number. Not only that, if 2023 did reach 3.4 million, then it would be likely the last quarter should be at about 1.25 million deliveries, which would be a run rate of 5 million a year. Which means that if Tesla don't achieve 5 million for 2023, they should at least achieve a run rate at that level. But if Tesla did achieve 5 million for 2023, that might mean it's possible Q4 2023 could be about 1.7 million vehicles, up almost 6 times as many deliveries as Q4 2021, 6 times in 2 years. That is tremendous growth. I'm just trying to look at things through a different perspective to value this company, especially with the new information we've had. The information being that by 2023, Tesla are battery constrained. Therefore, the perspective I'm looking for here is how many batteries will Tesla be at when they're still constrained? I'm thinking 350 gigawatt hours is a possibility, enough for 5 million vehicles. But what if Tesla didn't hit the 350 gigawatt hours until a whole other year later, say 2024? Well, 5 million vehicles is still a really good number even for 2024. If Tesla delivered 5 million vehicles by 2024, then that would at least 10x the current EPS. This would also give annual earnings of an equivalent of over $100 billion, except this totally excludes the potential for FSD and robotaxis. Yes, 5 million vehicles delivered for 2024 sounds good, but 350 gigawatt hours for 2024 doesn't sound as impressive. not with 2 years of ramping up 4680 and more CATL batteries. In other words, it should be more than possible this is achieved in 2024, but I think also a good possibility even as early as 2023. It does sound hard to believe, but in this scenario we have shown it as a possibility. Just work backwards with me on the math here one more time, as it's really simple. When do you think Tesla will have enough supply for around 350 gigawatt hours of batteries for vehicles? Please answer that in the comments below. Tell me when you think Tesla will hit a supply rate of 350 gigawatt hours a year. Then if each vehicle has an average of 65 kilowatt hour batteries, then that's 5.4 million vehicles. Now my guess is that Tesla will have that much battery supply sometime in 2023. But if it is 2024, then they're not doing as well as they should be. Yet at the same time, 5 million vehicles in 2024 would still be amazing. We're at around $9,000 net profit per vehicle now. It could be closer to $15,000 in 2023, especially if we're at 5 million units a year and advances in FSD. That would mean a total profit of $75 billion for Tesla in 2023. With a P ratio of 50, that is close to a $4,000 stock price. Elon said they'll be battery constrained once again in 2023 and can make cars as fast as they can ramp up 4680 batteries, implying no other supplier will be ramping up as fast as the 4680 line, as according to Elon, it depends on the 4680 ramping. Anyway, even at only 150 gigawatt hours of 4680, Tesla should have enough batteries for 5 million vehicles a year. Remember, the ramping up is going to move faster than we thought now, due to no added complexities of new models. But it would appear that calculating the amount of battery supply Tesla can achieve each year will be the biggest indicator as to how many cars they can make. That is surely just another way of interpreting the fact that Tesla are battery constrained in their growth once the chip shortages are rectified this year. If things start going well for Tesla, for example in supply chains, then maybe Tesla could be at 250 or 350 gigawatt hours a year of 4680 batteries alone in 2024. Possibly, especially if we factor in what Berlin is capable of, not to mention anything else that could be built over the next 2 years also. And if it's batteries that are the constraint, then wouldn't you think a reasonable amount of the new capital growth would be oriented around increasing battery production? If that's where the bottleneck lies, then that's where the most attention is required. Anyway, as microchips is such an unknown for us for 2022, it does make more sense to think about 2023 with what we do know and we can work out. It might be possible that there is not much movement for most of this year, and perhaps towards the end things start to ramp up, and some of the shortages are alleviated. Perhaps that's why actual gross margin on just autos was slightly down in Q4, as Tesla have to pay more for chips. But if you have a product that is fetching perhaps $30,000 in gross profit, then even if you still have to spend $5,000 extra just on chips, it's still worth it. As Elon said, there are a lot of chips out there, but are being hoarded. Perhaps if there is a market for high-priced chips, then some of these buffer chips might also become more available. This might also imply that although the chip shortages is the bottleneck this year, but the fact we know that batteries are the next bottleneck might mean that Tesla still stockpile as many batteries as they can this year, implying that perhaps the downtime with chips in the long run would actually have had little impact on Tesla's growth. And then to be saying that from here, 2023, it's when the 4680s really make a difference. Except that at this stage, sometime in 2023, Tesla are likely already at 350 gigawatt hours. Therefore, for the 4680s to have any major significance, it must be a reasonable number, which is what they definitely implied from the earnings call. Elon said, and that chip limitation should alleviate next year, and then probably we transition into a cell limitation battery. You know, total gigawatt hours of cell limitation, which is when the 4680 will become very important. The 4680 will become important. So we would hope that the 4680 should start really ramping up at about this time. Maybe 4680 could reach a run rate of 250 gigawatt hours a year by the end of 2023 even. Every 250 gigawatt hours is another 4 million vehicles. The exponentials are starting to kick in now. The numbers are getting bigger. They will get stupid big soon. It won't be long until we'll be talking more about terawatt hours and trillions of dollars. Anyway, I would have thought the stock price is bound to have some sort of breakout around the time this kicks in. Thanks for listening. Please hit the thumbs up and subscribe. You can follow me on Twitter and talk to me on Patreon.